How's it going, everyone? It's Sam. Bitcoin was just rejected yesterday at the all-time high, but today we have a lot of interesting news. We have a lot of good information coming out and some big things happening that were just announced by Michael Saylor, by a couple other people as well. We also have Coinbase screwing you. I want to explain what just happened because they just announced their earnings report. And there's something that you have to pay attention to if you are an investor in this market. If you don't mind, hit subscribe, turn on the bell notification so you can see future videos just like this as soon as I make them. Things are moving quick, right? Just a few days ago, Bitcoin was in the mid 60,000s. I know it's crazy to think that, but that was literally less than a week ago. And now Bitcoin is racing to new all-time highs. We got rejected yesterday at all-time highs, but we're just trending sideways, gaining some support. I would not be surprised to see some more big inflow numbers from BlackRock today. And to be clear, we can fall down, but I think there's a lot of good things ahead. If you want to trade this market, if you want to go make some extra money by leverage trading, there's a link underneath the video to Margex. You can get started in just a few seconds. As you can see, we do have a bullish setup. It looks like a very similar setup to what we've seen before, where maybe we come up, go back down, test prior resistance, flip that into support, and then continue moving up. Right now you can see we moved up to about 71.5, went back down to 70,800, went up to 73.5. Now we're coming right back down to within $100 of where we got rejected a few days ago. And now it looks like we're trending sideways, maybe even bouncing. So again, I think this is a really bullish setup. If you think it's bullish, or if you think it's bearish, you can check out the link underneath the video to Margex. You can also bet on the US elections there. Now, Bitcoin dominance coming down just slightly, right at 60% here today. There was some news of being passed around Twitter. I cannot find where this was originally talked about, and I know a couple people even took this down because they couldn't find the original source. But supposedly, Trump has said in a speech recently that Bitcoin is money and you have to pay capital gains if you want to use it to buy a coffee. I was talking with a friend and he said it really shouldn't be taxed. And I agree. So he's saying basically, hey, if Bitcoin's currency, which looks like it is, or a commodity, you shouldn't have to be taxed if you use it as payment. At least according to this. This would be really bullish. I mean, think about that. If you could use this as an investment / savings vehicle, it goes up in value, then you never have to pay tax on it. That would be huge. That would make a lot of people want to invest in this. Imagine if there's something else like that. A lot of people would be using it, investing in it, saving in it. It's hard money. A lot of people would love that. Imagine getting a 10x and not having to pay taxes if you bought something with it. A lot of people say, when are we going to know when to sell Bitcoin? And they say, at some point you won't have to. This may be that future. Now, I don't know how likely this is to be true. We'll have to see how things progress. And it might be a moot point depending on who becomes president next week. There's some speculation. Max Keiser just said in an interview that Saylor will announce a $25 billion stock offering to buy Bitcoin. No confirmations, just Max's take, but sharing because it's probably true. And then more people are talking about it. A lot of people posting about it on Twitter today. This is one of the original posts by Max Keiser. And yeah, it's bigger than that. MSTR just announced earnings. And the thing that everyone's talking about, they're planning to raise $42 billion over the next 3 years to buy more Bitcoin. Keep in mind, they've only bought about $10 billion so far. The net asset value is sitting around $18 billion, something like that. But they've only bought about $10 billion so far. They're planning on doing what they've done over the last 4 years, every single year for the next 3 years. Actually, more than that, like 40% more than what they've done so far, every year for the next 3 years. I mean, that's crazy. I mean, that's $1 billion buy every single month. That's $30 million a day. When you break it down like that, people don't even really pay attention to it, right? They think, oh, $30 million a day, that's no big deal. The BlackRock ETF does that already. And that shows you how crazy it is. because MicroStrategy, very well known for buying Bitcoin, and yet they're about to 5x their purchases over the following 3 years. And part of that is due to the fact that they are much larger. Take a look at MicroStrategy stock. Right now, they're a $50 billion market cap. Let's go a year ago. A year ago, they were much smaller. They were 1/6 the size, right? They're under a $10 billion company. A couple of years ago, at the bottom of the bear market, they were like a $1 billion company. So yeah, they're able to get more debt. They're able to buy more Bitcoin, collateralize more loans as they get bigger. Take a look at what Michael Saylor said last time that Bitcoin hit 72,000. This is actually from about 7 months ago. We'll get to some more stuff here in a second, but just take a look at what he says here.
Sure. Well, I think I'd start just with Bitcoin. Bitcoin is certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it. It's going to divert capital from risk assets and risk ETFs like SPY, and you can see that these ETFs are doing that. It's going to be incorporated into a lot of funds like the BlackRock Global Opportunities Fund or the Strategic Income Opportunities Fund. And so it's an asset class. As it goes into other funds, it's going to become structural. The halving is going to cut the organic supply of natural sellers in half around April 20th. That means there's only about $32 million a day of natural sellers. And the price of Bitcoin is going to have to adjust up in order to meet that investor demand. So I think that's what's going to happen next to the asset class.
In terms, though, of how investors should think about your company, and right now...
And we don't have to play that, but keep in mind, with 450 Bitcoin bought a day times 72,000, that's about $32 million of Bitcoin that could be sold each day from new sources. Michael Saylor and MicroStrategy alone, they're going to buy about this amount every single day over the next 3 years, according to their plan. Now, the stock is down after hours. That could be due to a variety of reasons, but really this is just a Bitcoin treasury company, a BTC. This is what they are meant for. So if their cash flow is a little bit lower than expected or something, I'm not too worried about it. So yeah, this is a crazy awesome plan for everyone that's invested in Bitcoin. Now, we also had Coinbase earnings today. Now, revenue came in lower than expected. I didn't even look at EPS yet, but what I really want to be paying attention to is what they said about trading volumes, about fees, that kind of stuff, because it means more than just how Coinbase is doing. This is representative of crypto in general. So revenue was down from last quarter. Transaction revenue was $573 million, down 27% quarter over quarter. I think this is interesting. I think it means that more people are just kind of holding. Keep in mind, during this period, we did have a lot of chopping sideways. And prices were down slightly, maybe even two. But you can see July, we were at 60, then 70, then back down to 50. Then September, August was all pretty boring, right? We're just trending sideways. So not as much volatility, not hitting new all-time highs where people really want to sell and take profits, maybe not even dipping as much as some people want before they buy. So I wasn't surprised to see these lower numbers. But what I was a little bit surprised to see, I guess I wasn't even surprised because I know they do this. I know this happens every single quarter. I take a look at this. The transaction revenue broken down between consumer and institutional. And then if you go a little bit further, you can see the trading volume between consumer and institutional. This is crazy. And a lot of people don't pay attention to this, but you can see here, they split it up between a couple different pages. I think it's so that people don't get pissed off. But the consumer paid fees of about $483 million. Or Coinbase made $483 million. And this is after about $34 billion of trading. So quick math, they're making about 1.3% on every single trade. Okay? Now, I will say they do have a advanced function that uses an order book. There are fees there, but there's no spreads. This is made from spreads and fees. Okay, so 1.3%. Pretty high fee compared to some others in the industry. Maybe not too bad. If you look at something like a leverage exchange like Margex, they base it on how leveraged you are, like how big the total position is. So for like a market order, it's 0.06% times maybe 5x. So you're at 0.3% to open it and then to close it, for example. Now, that's pretty standard across industry, but with these kinds of spot exchanges, it changes a lot more. If you're using Coinbase, I'd use the advanced function, not just like the basic function or basic page. You don't need a separate account. You can just toggle back and forth. But take a look at this. This is how they're screwing you. A lot of people don't realize that there's a change. There's slippage, right? There's some change in price between what they're charging you and what the actual price is. So I should say a spread, right? So maybe Bitcoin's at 72,000, but they tell you it's at 71,800 if you're trying to sell it. Or if you're trying to buy it, it's 72,200, for example. And their fees on top of that. Institutional investors did 5 times the volume, 5 times the trading volume, and they paid 1/10 the fees. So on a $1 million trade, an institution might pay about $367 in fees, while you would pay $13,000. That's how they're screwing you. They take advantage of the people that are trading, on a smaller scale. And of course, this is kind of to be expected, right? Institutional clients bring a lot more volume. They bring a lot more revenue. It's easier to work with them versus 1,000 or 10,000 retail clients. But just something to keep in mind. And I'm not trying to point out Coinbase in particular. All the companies do it. It makes sense from their perspective. And institutional clients might be a little bit more, they might notice that a little bit more. They might be a little bit more cost sensitive, while a consumer, you're getting in and out of Dogecoin, you don't notice that it's 0.5% off from the actual price. So pay attention to that in the future. Again, use the advanced section, toggle that on so that you can save some money in the future, in my opinion. Of course, make sure you know what you're doing. Meta Platforms also had earnings today. They're down 1%. I haven't checked that out yet, but a lot of people are going to be paying attention to Microsoft. They're up 1.43 right now, 1.43%. They beat on revenue. They beat on cloud. They beat on EPS. All pretty significantly. Okay, keep in mind too that there have been discussions over whether Microsoft was going to allow the company or allow people to have them do an assessment to determine if they want to invest in Bitcoin. They've said, basically, we think you should vote against it because we're already looking into Bitcoin. We don't need this as well. But you can start apparently voting for this to get an assessment of investing in Bitcoin from Microsoft. Keep in mind too, they print so much money. This is actually from last quarter. Let me just make sure this isn't updated. From last quarter, they had $64 billion in revenue. They had $23 billion in free cash flow. Okay. They had $20 billion in net income, $34 billion in EBITDA. This is over a quarter. So they are a profit machine. Over the last, trailing 12 months, they've made net income of about $90 billion. These are the companies that will be looking at Bitcoin eventually. Not just Michael Saylor buying $42 billion with debt, but companies that have free cash flow, that have tens of billions of dollars a quarter in net income. They'll be looking at maybe adding this to the repertoire, right? They pay a dividend, they pay down debt, they buy back shares. Sometimes they don't even pay down debt, There are only a couple different ways that they can reward shareholders, though. They either reinvest in their business, they cut down their shares, or they pay dividends. So this could be one more thing that they do. They add to their treasury balance, or their treasury onto their balance sheet. They add some Bitcoin. It wouldn't take a lot either. Think about this. If they put 1% of what they make in Bitcoin, that'd be $1 billion a year. Barely noticeable for them, but a couple of companies do this, and yeah, I guarantee you Bitcoin's price will go up pretty quickly. Let me know your thoughts on all this. Also, just wanted to throw this in there. The U.S. Treasury dropped a 17-page bombshell report on digital assets and tokenization, according to Kyle Chassie. And I read through this. Apparently, the TBAC presentation from October 2024 went through digital assets and the Treasury market. Looks like they're just doing some basic research, right? Trends in digital asset growth and usage, rapid growth from very low levels. They look at Bitcoin's market cap over time. They look at the use of stable coins. Why are they growing? They mentioned too that they have resulted in a modest increase in demand for short-dated treasuries because they're buying a lot. You can actually see here, this is pretty cool that they're looking into this. U.S. Treasury bills held by Tether per quarter. They're writing reports on this. That's pretty sweet. So yeah, everyone is paying attention right now. You can't tune out and not pay attention to crypto right now. Let me know your thoughts on all this underneath the video, though. I think this is a very bullish time for crypto. I would not tune out. I'd be paying attention to everything. If you want to know what I'm buying or what I think is a good value, I'll put this video here on the end screen, up here, where I talk about some cryptos I think are pretty good values right now. Let me know your thoughts, though. Thank you so much. Again, if you want to trade crypto, there's this link to Margex underneath the video. I'll see you all in the next one.